What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for December 23rd, 2022. So if that sounds like something you're interested in, consider subscribing as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. Now, looking into today was an interesting day. We had quite the sell off, quite the panic today, as essentially initial jobless claims have come in and have been more than expected, more than anticipated. It came in about 2,000 more than normal, but are estimated. But that is a small piece of the puzzle. Something I've said up to this point, yes, I think jobless claims, non-farms are going to be looked at very closely because of the fact that we're seeing a lot of layoffs. Yet, the administration, everybody seems to think that things are still fine. When we just had Micron yesterday talking about laying off 10% more of its workforce moving forward into 2023, and the Fed essentially projecting some more big layoffs coming into next year. So that's what's interesting there in that aspect. So again, the feed did not help coming into today. Tomorrow we do have the PCE as well, so we're going to get even more volatility tomorrow. The thing is that right now, currently, there's not a lot of volume, so the market can be easily pushed. Even today, with the sell-off that we had, there wasn't a ton of volume, which was very interesting to see. And not only the jobless claims, I think what ultimately we have to understand here too is that I think the algorithms are very sensitive to what's going on with essentially any kind of unemployment numbers or any kind of data right now. I said that it would get back to this way after they feel like inflation has gone down, but now it's more so, okay, now it's just the Fed. The Fed's continuing to hammer rates are going to essentially single-handedly destruct the economy. And so a lot of data now is going to be very sensitive now because it's not just about inflation anymore. Now it's just about where's the consumer. So all the consumer data is going to be extra sensitive now. I'm not really saying it's going to be pivotal. Again, the same things that are going to be pivotal are monetary policy more so and core. But I think core is starting to wear off its shine because right now, again, we're trying to gauge a consumer. Being said, we have that data tomorrow. We could still get a lot of volatility tomorrow, but again, it's not going to be pivotal, in my opinion. It's not say you can't have big moves in one day. You sure can have one moves, but to sway the whole market one way or another, this isn't a pivotal event. But again, intraday it is. Nonetheless, being said, going back what happened on Monday, and one thing to really, I talked about the yen and I talked about what was going on with Japan and essentially that they essentially put a hedge almost on the yen in which it could fluctuate 50 points either way, which which is not good. But again, people are having to do this because of the dollar being so strong. And so now you've seen this in Bank of England, the same thing not long ago. And so what you're seeing is these countries are having to protect themselves by selling bonds, and bonds are a huge part of the market. I've never said that they weren't part of the market. They're huge, and they control a lot of the way our financial structure works because of the debt system. But ultimately, understand that they the manipulation of these bonds have a dramatic impact. We have to understand that Japan, they purchase a lot of foreign bonds and stuff as well too. So that you have to keep that in mind, and this is why it affects us so much. All because we're under the same debt system. So, being said, if they continue to make moves like they did on Monday, and the rest of the world is continuing to make moves. This isn't the first time that Japan has done this. They did this about a month ago. If they continue to do this, this is going to be one of the things that could potentially crater the market even more so. It's one of the black swans. You have that. You have this fine, very thin layer of playing with the bonds in these financial systems and understand how much it impact this manipulation of bonds affect the market and what's actually going on underneath. And then not only that, you have potentially a housing crisis on our hands with people being unemployed in the race to sustain yourself until things change or pivot. And then understand again that the Fed are single-handedly placing the entire economy at risk with these continued high rates and the damage that they're causing. And you're actually seeing what a rapid rate increase and sustained high rates will do to the market. And so we're seeing destruction demand. We've talked about that many times. And you can see it in people purchasing. Yes, your inflation is going away because people can't even afford to live. So it would make sense. And so again, to get at that, that somewhere between 2 to 4 where the Fed are aiming, you're going to need a lot more rates to be hammered. And the unemployment numbers are going to continue to get worse. Moving forward, again, you're going to see more and more layoffs, and so that's what's interesting moving forward. But nonetheless, I didn't talk about it too much yesterday because of the fact that there's you can only take so much of this news. Yes, the yen stuff, it's been going on before. This isn't something that's new. It's always happened. Again, they manipulated it about a month or so ago, along with Bank of England. And so you're having this back and forth, and just realize it's there and it's affecting the market. And then what was interesting today is towards the end of the day, we sold off like crazy, and then we just rallied right back up like nothing happened. And again, this is it's just the market's adjusting to what's currently going on. And again, low volume can do that. The institutions can move low volume a lot easier than on regular volume days. And so right now is big manipulation going on for the next week or two because of what's going on. So nonetheless, I still believe as long as nothing craters, right? The whole situation with the bonds is, again, a very sensitive thing. The consumer thing is a very sensitive thing. You don't know when that's going to buckle and what's going to come of that. Again, that could just be some news article that comes out or some piece of data that's like, wow, things are really, really bad. And then the whole market can crater. And this is how black swan events are created, right? They come out of left field. You kind of see it coming, but all of a sudden it's like, oh my God, this is really a big deal. And then once you strike fear in the masses is when you get massive, massive selling. I know even today they stopped, Thinkorswim stopped essentially leverage trading on Tesla at 2 p.m. Eastern Standard Time. So there's been a lot of people that have probably been losing money on Tesla. And so they cut off leverage for people on TOS. So unless you actually had the cash to cover, you weren't allowed to purchase calls, puts, or shares, whatever the case was. But someone has been potentially losing a lot of money there. Nonetheless, moving into tomorrow, we do have the PCE. That's, again, I think that's going to be a pivotal event. I think we're going to see bigger moves again. For a long time, we didn't see because we were more worried about inflation. Now that inflation is kind of on the wraps, I think you're going to get back to that more volatile period, and when any data is able to move the market a lot again, which isn't a great thing. You'll still get stagnant periods, I believe, when you start getting around policy again. Will be big until they stop touching policy. Essentially put policy on a freeze for a little bit, just to try to see if inflation can sustain itself, which may be in April or May, and then just keep it at that high rate for the remainder of the year and see where we go from there. It's not saying we can't adjust or there will be a churn. It can always happen. It's dead set on anything. It's the way the market works. It is very dynamic and it changes rapidly. You just have to learn to be adjustable. And my thesis has always been the same so far. It's not saying my thesis can change. There's a couple times I was thinking it might be able to change, but then things just didn't play out that way. right? There would be more data that would suggest that things are really bad and continuing to be really bad. And I still believe that there will be some sort of cataclysmic event that's going to happen between now and next summer. What is it going to come? Is it going to come because of the bonds? Is it going to come because of the housing crisis? We have to see. We don't know. Those are the two things I can see on the forefront. There's a lot of stuff that can spawn off of those things. So that's something you have to consider as well. But with that being said, tomorrow, let's look at some levels. What we're looking at for tomorrow. So I think you still have to really watch again the 3,900. I think it's a very hard ceiling, and so far right now our floor is 37.75. We have to see if we hold that or if we can turn tomorrow. It's going to be a big player, so we have to watch that. Again, we'll see. Again, I think that that data tomorrow will, and that data is at 8:30, so it's going to happen before the bell opens. So it could really fluctuate this thing in the morning. So we have to really watch closely on how that does play out. Bitcoin still gonna ride sideways just like the market. So keeping an eye on that one. The dollar, everything is still very sideways in a very confusing time right now. And again, it's holiday mode, so you really don't get a lot of movement. So that's something else to consider there. Tesla just absolutely getting crushed. There's just a lot of bad news about Tesla and what's going on there, and this thing's continuing. And one thing you want to watch too here is on the monthly on Tesla. You're sitting right at support, essentially the 130. This thing, that's the monthly too. You got another week. This thing needs to hold the 130 if it can hold the 130 for the month. I think Tesla, I'm not going to say has found a bottom because if we do have a cataclysmic event, I think this thing could really reset pretty hard and come down to 100, or what is it? Yeah, potentially 100, roughly. You do have the 200 monthly support, roughly around that 75 too. It's even lower, but by the time the market gets down there, it's probably closer to roughly around 85, 90 for that 200 support on the monthly. So something to keep an eye on there. Apple, it's got really, really strong support here at the 134. We really don't want this thing to break. If it does, it could get a drop down at 112. Again, it really just depends on timing. With this Black Swan event happens, it'll be really interesting to see. But even today's move with SPX, you could see it on the monthly. We were retesting a support that we had broke, and then just a natural flush because it was the first time retesting. BA again making higher highs here and then rejecting hard. Be interesting to see. Again, value is done extremely well in this market. So has banks. Banks is something else I've been talking. So for BA, if you want it to be bullish, again, you're very overextended. You have to break 200 tomorrow. Otherwise, if you can't hold the 187 tomorrow and you open below that, it could get some selling back down to 175. So it's something to keep in mind. Another thing to watch too is chips have been, since MU, there's been a lot of bad news about chips. And today they just got absolutely handled today. But that's the thing. NVIDIA absolutely wrecked and popped right back. It could be good to the long side if the market holds. Again, it really needs to hold above the 152. If it can't, could at least pop up to the 161 tomorrow. Chips might be good to watch the long side if for some reason we start getting fuel to the upside. That's NVIDIA, AMD. Again, you want this back over essentially the 65 mark to be safe. This looks like a clean break and retest for another dump. So you definitely want to be careful with that. But the news, again, that's being reported about the chips is not good, and the data centers and all the other the cloud infrastructure, everything else is not looking good. Nothing is looking good. This is the concern. Um, is that data centers reporting even lower usage. So what does that mean? Is people just trying to conserve energy? Maybe, who knows, right? And not spending. Companies aren't spending for these things because energy is up there. It's extremely expensive. So interesting time. It's trying to navigate this market is definitely difficult. And you got the banks. The banks again playing another. Looks like it is really trying to hold this 129. If it breaks 129 cleanly, this thing is going to come down. And again, that JPMs is one of the last ones. This one again, Goldman Sachs break. It looks like another retest. This thing needs to hold essentially this 345. If it breaks this, you're going to get some pretty heavy selling. It does have some good support on the way down here at the 323, and then potentially you get some speed bump support here at 306, and then major support here at 283. So really watching that again. There's a lot of different moving pieces that are going on right now. There's a lot of different information. We're not really sure exactly if that's what was moving the market today. But again, I can tell you the unemployment is going to have more weight. The bonds that Japan is dealing with and trying to continue to keep the yen stronger is very, very, very important. Again, because of the amount of assets they have in bonds is important, and that's why when people talk about the yen, why it's important because of where they sit with bonds and how many they do have. Right, there's only so many allocated bonds, so this is what we're dealing with. And again, I think we're just waiting for something to break at this point. And I don't think we've seen what broken looks like. Consumers been pretty beaten down, but again, the whole infrastructure is barely skating by, waiting for that final snap. So if you made it this far, I do appreciate you. Go ahead and drop a like button. And until next time, I'll see you guys later.